Good morning. Right, this is a quick overview of a few of the new things in the new build or latest build at the time of making this video of pjsProfileBars, in particular just to cover a few of the data analytics concepts because it's a fairly complex piece of the product which needs some explaining and some time to get to know it. Please excuse the busy nature of this chart. I've got a few text things printed on the screen for dev purposes. So what you're looking at here is a chart that has actually been trained. We have some of the new tabs down the side of the chart here. This is a new feature in the new builds. As I say, not yet released at the time of making this video, but likely be in the next week or so. The tabs are configurable. You don't have to have them there. In fact, I think they are off by default, so you need to go into the settings and turn them on. But they do enable you to quickly access information and then hide it off the screen so it's not distracting. Things like time and sales. Nice new improved time and sales with the tick blobs here, which are really cool, actually get your attention. There's a power meter at the top that shows you the balance of trades within this tape length as well. There are some diagnostic tabs. Excuse me. If you have this turned on in the performance section, you'll be able to monitor some diagnostic things. Sometimes if you have a question or a problem, it's useful to have some information from in here. Just a little about that shows you a version and release date and things like that. There is support for continual alerts as the product detects certain things in order flows or on bars or alerts that you've set. They can show up here. You also get a little icon on the tab when there's new information, so you know when to go and have a look. And SA is a situational awareness. That takes context from the chart, the past few days, the past week, month, and so on. And depending whether you've set that you're a scalper or a trend follower or so on, it gives you a breakdown of basically the current market conditions, maybe things to look for, today's economic events that might affect the market you're trading, and just a general overview. That does require separate LLM support. It's all free, and you can get all the software you need, or you can use third-party services, but we will do a separate video on setting that up at another time. There is documentation on this, brief documentation, in the website documents if you want to have a look before that's done. Right, so on to data analytics. I'll do a quick explainer on the chart first. Let me grab an arrow. So we've got these bars here. We have this big bar, we have this smaller bar overlaid on the top of the large bar, and then we have these two plots. We also have a DA tab down here with values and these little triangles. So let me pull up the settings for data analytics. Okay, so what we have, sorry, before I say that, I might pause the video from time to time just between okaying things because it'll shorten the video and save you watching a blank screen. So US market open time, not necessarily the US market open time, actually. It should be the open time for the market you are trading. For me here in GMT land, that's 14:30 because I mostly trade the US indices. It's important you put that in and important you get it correct because there's lots of things like opening ranges and balances and so on that are based around that are important. All of these settings here, if you hold the mouse over them, you'll normally get a little pop-up like that, giving you an explanation anyway. So data sampling rate. What that does, on a small time frame chart, you might have thousands and thousands of bars just on your visible chart. At least every other bar is just noise. There's not a lot of sense in necessarily training the models on all of those bars. You can possibly reduce your training time and still be just as effective by sampling them. So if you wish to reduce from every bar to say 70% of bars, you could put 0.7 in there, and we'll just randomly sample the bars. If you've got the CPU and processing and everything to run at 1, do it. But if you find the training runs take too long, you can try reducing that, as I say, particularly on the very low time frame charts, if you were looking at sort of 10 range, 14 range, things like that in NQ. Valid trade times. These should reflect the time window that you want the model to learn from. There's no point training a model on 24-hour data if you only trade the first hour of the open. What you really want is an hour before the open, an hour after the open, and that window in between, because the behaviors then will likely be very different on a micro scale to the behaviors, say, overnight. So I train on a fairly wide window here, but even though I don't necessarily trade all of that time, I do tend to sit and watch it and take my opportunities. So that's why I have these set. Again, these are UK times for the US indices. Force rebuild. That is the option that actually tells the product on the next chart reload to train itself on data. It's important that you have enough data to be able to learn from. So on a chart like this, 30 to 45 days, you want at least 5,000 bars. It's not so much the days that count, but the number of occurrences of bars. So 30 days of 30-minute bars isn't very many bars. 30 days of 10 range bars is tens of thousands of bars, if you see what I mean. Also, the models do gain information from daily and weekly contexts. That might not matter much if you're micro scalping on very small time frames, but if you're trading a little bit larger, in order to capture that alpha, you need to train on a period that exposes it. So if, for instance, we know that weekly balances affect the models in a positive way, if you've only trained on 3 days of data, you're going to lose that alpha. This is a part of the product that you really have to do some experimentation with, because everybody's trading different instruments, different chart periods, and in different ways. You kind of need to find out what works for you, but hopefully this overview will give you an idea of how you can make it fit with what you do. So before you do force rebuild, absolutely make sure your chart period exposes at least those 5,000 bars. And if, for instance, that 5,000 bars has been an entire uptrend, it is not good data, because you've never seen the market go down, you've never seen how far it goes, you've never seen what the rotations are like. So you also want a period of data that covers varying market conditions that you are going to trade. The model can only learn from what it has seen. So if it hasn't seen the behavior before, it's probably not going to offer the best advice. So bear that in mind. File name. It's just a name for the data to be stored on the system. It should be unique for each chart. Do not put the same name on another chart with another instance of the indicator, because it will not work well. Base opacity, that's shouldn't actually be under the file name there. Sorry, put that down to this being a development version. That's for these opacities of the bars. Backfill bars on restart. So what happens If you specify this, and I have quite a high value here, I think the maximum here is 2,500. When you start training, at least this number of bars will be banned from being looked at. The newest bars. So here we have 2,000. We have the 2,000 newest bars will be segmented, partitioned off, and the product won't be able to see them. And the idea behind that is you don't want to train on data that you're going to ask it to predict on, because if it's seen exactly what's going to happen, it will be very good at what it does, which obviously doesn't reflect what happens in real life, which a lot of ML models kind of forget. But so it's important, if you increase this, you probably have to retrain your model if you haven't had new data come in since your model was built, because you will be back predicting on bars you actually trained on. And again, these lines, these plots here, these are what the backfill is, and it just gives you a little idea of what the model is doing when you load the chart. It will extend your chart load time, and depending on your CPU and so on, it might be a couple of seconds, it might be 10 or 15 seconds. So maybe increase this when you're learning about the product, and then drop it back down to 250 or something when you're actually trading, just so it gives you a bit of context if you start chart up in the middle of a session. So show bias plot overlay, that is these two plots here, and they intentionally just draw over the top of the bottom of the chart window above the data grid like this. This is to save having a separate indicator, and an indicator, well, in a supported way, can only plot in the window that it's actually supposed to be in. So NinjaTrader doesn't like it if you plot in other windows, but it is quite useful. It can draw over the top of the bars, but it doesn't really detract from anything, so it's just the most effective way to show it on screen, and of course you can turn it off. The signals performance report is something I'll come back to in a minute, because it's entirely separate from the ML training, and the models don't need to be trained in order for signals performance to actually work. Filter metric, we'll come back to that. So bias mode, it's important that you set this. I'm a scalper, I have it set to scalp. If you were more of a trend follower and want to look at slightly bigger pictures, select trend. What that does is tell the models what is more important, short-term gains versus long-term gains. Long-term gains, you're going to sit through bigger wiggles and moves and be more following the dominant trend. Scalp, you're going to be both sides all over the place. So it does change how the models behave and the signals that can come up. So make sure you set that appropriately. Paint chart with market bias changes. There is a Markov model, you can Google that if you want, inside of this, which monitors market state, and when it detects that that state has changed, it will paint a vertical background on the chart. I personally don't use it, it's more for debug, but it is an input to the models as well. Regime changes, again, similar thing. Don't worry about this for now. Minimum volume. On certain types of charts, say you have an 8 range chart, very, very small, can be noisy. If you were trading something like NQ and there was very little liquidity, you can sometimes literally get gaps in the chart where 1 or 2 contracts or even no contracts trade. You don't want the system to use bad bars like that. In reality, you're never going to get filled there, and they might look great in back tests, but as you can't get filled, tell the system to ignore them. You don't want to learn from things that you can't actually exploit. So the default is 1, but you can up that if you want to filter your data a bit more aggressively. Minimum price change. The system does classify bars as kind of being up or down or not having moved, but the likelihood that a bar kind of ends on the exact same tick that it started on. This is kind of rare, so this is a minimum sort of fluctuation in points where the bar movement is considered neutral or that it has gone up or down. Again, it's important for the model, and a couple of points I find appropriate for NQ. Now we have a section here with profit targets and stop losses. Doesn't have to actually reflect your overall target and stop, but it is very important to the model, because when the model, I have here a 40-point target and a 38-point stop loss, 30-point break even. The model is going to look and say, did we go straight up 40 points, or did we come down and hit our stop before we went up 40 points? And it is going to classify specific bars and parts of the market as winning from here or losing from here based on that. So that's great. I mean, that does exactly what it sounds like. But if, for instance, you target 100 points in your trade, the further out you predict, especially on a smaller time frame chart, the less likely you're going to be able to get an accurate result, because the further out you go, the more your probabilities actually decline. This is just my own findings, by the way. It's a pretty common thing, but this applies to this product and how it works. So of course, predicting what will happen tomorrow is not as easy as predicting what will happen in 30 minutes time, and that's the idea here. So even if you have a target that's out there at 100 points, I don't recommend you target 100 points in the learning. I would target what will comfortably get you into an opportunity, because even if you target 100 points, after 50 points there could be a tweet or someone comes in and drops 500 contracts at market, and what was a perfect prediction will just turn into a stop. So that's not what you're looking for. What you're looking for is a range that comfortably gets you into a trade so that you're sitting in an opportunity where your target can play out. And then if it comes back and stops, that's what happens. Break even. If you do move your stops to break even at specific points, important to put that in, because you could have this trade go up 39 points, come down 39 points, and then go up 40 points to your target. You would have been stopped out, but the market still considers it a win, or the model rather, sorry. Again, we're just trying to make sure that the model reflects how you are actually trading, which a lot of models don't do. And all this is checked, by the way, not with NinjaTrader's backtesting engine, which, dare I say it, wouldn't provide accurate results for this. There is an internal backtesting engine that goes tick by tick through all the data that you have, and it actually does full fill simulation. So in times of low liquidity, HFT, things like that, it takes that into account. It will only fill you if there is reasonable liquidity for you to get filled. It doesn't assume that you're the only market participant trading who will get filled. So obviously there's competition for those fills. And it does introduce realistic latency, including a small amount of randomness in that latency. Which means your fills on the tick-by-tick basis will vary from time to time with exactly the same signal. But that is how it works in reality, so that is what we've modeled here. So on some of the reports you may get slight variances from run to run, even if you run it on the same data with the same settings, and that is because that is what happens in real life. Consider that a bit of a sort of Monte Carlo randomness type test, where you see what will happen in real life versus what happens in perfect simulations. There is a trail stop function. It's not supported everywhere yet in all of the reports, but it is supported by the learning model. So again, if you have a trail stop and you do move your trails up, you can put that context here. We support this trail stop here is when you move your trade to break even. So if you set 20 in here, 20 points, the stop would be moved to break even. And then we have a trail stop interval. So if you set that to say 5, every time you get another 5 points, it will move up another 5 points. So it's just a basic single step trailing stop, but it can quite dramatically affect equity curves, things like that. So max trade time. Now this is very important because of concept I will explain in a minute. This should be your maximum outlook, and I know as scalpers we all we're here 5 minutes, 10 minutes, 15 minutes, and then 60 minutes later you're sometimes still sat in a trade. This should reflect your proper expectation of how long your trade should play out. And I'll explain why. These plots here, this plot here is a risk-reward factor based on what you have input here. So this plot here is saying that as we're going up, statistically, based on what has happened in the data this model has been trained in, you should be looking on the short side. You may know better, but statistically the model says that going into here, the risk reward is to the downside. And you can see here this plot is actually increasing as we go up and then dropping a bit here. So this plot does not say go short, and it's important for you to get that concept. It is not a trigger. It is telling you statistically, again, where the risk reward is based on what you have input here and trained the model on, and how the market has behaved in its data window. So for instance, if this is climbing and this is climbing, I wouldn't be looking to buy here. I might, do the simple thing. Pop in your trend line, wait for the break, and you can see there's a fairly aggressive break here. There's a short signal, there's a nice short. And you'll see the probability decreases slightly here because we've already come back. And again, this is obviously very different for mean reversion trades versus trend following trades. Trends tend to occur less often historically, so you will find the model, particularly depending on the data window that you've trained on, quite likes mean reversion trades. And that's because statistically they are the most likely thing that will work. So it's not telling you take a short now, it's telling you you need to look out because the risk reward and the easier trade is likely to be on the downside when it occurs. Now these bars here, again, you don't have to have any of these on. These are turned on. The bars are turned on in the data grid here. There's an option down there to show the DA bars. And there's actually two bars. There's the faded one here, which is the opacity from here, and then there's the more solid bar. This is the expected outlook, or what statistically has been the next kind of dominant event at the end of your maximum trade time. So when we set a trade time, we are telling these bars to tell us where would we be typically when that trade time, or by the time that trade time has elapsed. And there are actually two windows. There's a short window here, which is the dominant colored bar, which just covers the immediate time frame. And then there's this longer bar, which is obviously a much bigger move, which covers the entire time frame. So we're saying here, we expect in the next hour, we would be down from where we are right now at this point in time. Again, this isn't a an immediate go short, go long for scalpers, because you may actually have a significant drawdown during that period. But if you have your position sizing right and you watch and you take your signals. So with this being up, the risk reward being on the downside, and this here telling me typically we expect to be lower within my longer term time frame, and you can sort of equate this to a multi-time frame analysis if you like. We're not looking at hour bars or anything, we're just seeing what happened on this model historically in the future after this had occurred. It could be a scenario such as, around 3 p.m. where we've climbed outside the top of the value area, and typically in the next 30 to 60 minutes we expect to retrace down to closer to where the VWAP is or the VPOC is, and the model will actually learn things like that, and it will show bars like this, even if we're strongly going up at the time. So again, it's important to get that concept. This does not mean short now. It means we expect the market to be down within this time window in the future. And of course, it's not 100% accurate. It's not even 99% accurate. It's a statistical expectation based on the data you have trained it on. And they're reasonable. They do, as far as I'm concerned, have good alpha in there. The probabilities that we look at it from the models far exceed what we would consider you would get if you made random choices. And we actually do have, for comparison, and it runs all the time, a model that does take random choices. And we do that so that we can compare what the models are doing to what randomness is doing with the same stops and so on. Because randomness, especially in volatility with small targets and wide stops, can actually be pretty good. We want to ensure there's edge in the model. Again, a lot of people don't do that, but it's easy to sometimes confuse being lucky in volatility and small targets and things with actual edge. So yeah, I think that kind of covers it. For the training, I'll start a training run and just show you what happens. So we say okay on the, sorry, not the signals report. I'll cover the signals performance report first. There are a variety of signals within the product which are calculated intrabar. I won't go into what the signals are. You can see them in the product or on the website in the docs. Some of them aren't fully exposed, most of them are. But what this will do, we consider them events, we call them signals in the product. When you click this, and you don't need to have a trained model to do this, and then OK the chart, it will go back through the chart period, look for all of the signals, back test them based on the trade data with the parameters you have here for stops and targets, and give a very comprehensive CSV, which is stored as a text file on your machine, as to how good they are in the current market environment. And then you can pull them up in Google Sheets and just go through them, sort them, look at the profit factors, things like that. That enables you, if you're totally new to trading or totally new to the product and you want to say, what sort of signal, what kind of event can I look at in order to try and find good trades, you can look there. It'll output a good half dozen or so things that you probably should look out for, and then you can try and build strategies and things around those. And of course, what works well now in a volatile market may not work well in 5 months in a trending market, so you have to rerun it and check these things from time to time. It does also do a separate report for the long and short side as well as an overall report, because again, what is effective for longs in a current market might not be such an effective trade for the short side. So let's start a trading run. I will click force rebuild. I don't know how many days I have on this, but bear with me whilst the chart reloads. Okay, so my chart has finally loaded. Does take a few minutes if you have 30-40 days of data. It depends how quick your PC is, but if you have the tabs enabled, and I would make sure you do enable them before you do this, it will automatically start up on the DA Diag tab 1 training, and you can see a little data analysis in progress here. This will generate several models. There's actually about 7 or 8 of them. It'll depend on your market and various other things, but so you'll see the percentage go up to 100 and the model change, and it will go back and it will continue again. This really just lets you know something is happening. Can take a long time depending on your PC. If you have a powerhouse, it might be a few minutes. If you're running on an old laptop, it might be 30, 40, 50 minutes or an hour. 45 days on my i7 can take about 40-50 minutes to an hour on here, depending on the number of bars I select. So bear that in mind. Because NinjaTrader is a single-threaded application, or it deals with instruments on single threads, this actually all runs in a separate thread in the background. So do just bear that in mind. Be careful. If you refresh the chart here, it may take some time for this thread to actually abort and stop, so it will actually continue running in the background for a short while. It does mean that your chart doesn't freeze because we are running this in the background and you can see the progress here, but I would recommend, because it is fairly processor intensive, it'd probably spike your CPU to about 30%, which, as Ninja is kind of thread limited, it is actually quite a lot. So I would suggest you do training runs with your data actually off. So I would drop your data connection when you're doing training runs. If you don't want to, that's fine. The product will still work, but expect it to be slightly laggier in terms of moving around the chart and so on than it normally would be. All these lines that you can see on the chart are debug lines. They only appear when you're training, sorry, and they will slow the chart down, but it's not intended for you to actually trade off this. This training is obviously a rare kind of occasional step, but it shows you if you entered a trade at this point here, based on your stop and target, where the eventual exit is. Your interim stop or target might have hit, but this runs to conclusion of your time window. So it's really just for debugging. You don't need to pay a lot of attention to that. So basically, get a cup of coffee, sit back and watch this whilst it trains rather. You can't do a lot else. Let me pause the video for a minute. Yeah, so once this is finished training, all you really need to do, and do make sure it has finished training, I keep saying trading, sorry. Refresh the chart, all the lines and things will go away, the chart will load a bit quicker. If you prefer, obviously go into your data series and knock it down from 30 days to 7 or 5 or something, which will make the chart load quicker. You don't need the extra days once the model has trained, because it saves all the information it needs and loads it up each time. And then you don't have to wait for NinjaTrader to load all that tick data, which is what takes all of the time. Once you have a model trained and you refresh the chart, big gap there, in the settings there is that option to backfill. So what it will do is look at the current bar, then it will work backwards from your backfill period, and it will actually do predictions on those bars based on your backfill period. So you will actually see what would have happened in real time. That again will extend the time it takes your chart to load. So the maximum you can set there is about 2,500 bars, but I wouldn't leave it set at that unless you have a very beefy PC. And I think that about covers it. Hopefully that gives you an overview of how this is all intended to work. So a couple of things. The data analytics portion does require a separate key, which a limited number of people have at the moment, and we'll probably make that available to more people eventually, not on immediate release of the new build. The signals performance report is separate and will work without the data analytics. If you do ML builds, then the signals report can pick up on some of the ML stuff, such as very high confidence scenarios that occur, and it will include them in the signals performance report. If you don't do the ML build, all the static type of signals will still work fine. You just won't get a few of the ML signals. And the signals performance report really contains a lot of alpha. So it does require you fiddle around with CSVs and do a bit of data analysis yourself. But if you are looking for the edges, very much worth spending some time looking at that. So there we go. I'll leave it at that. If you have any questions on this, hopefully I've covered most of it. Best place to go and ask is in the Discord. You can either chat to the new support bot or me or someone else in there, and hopefully get answers you need. Thanks very much.